welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, September 10th, 2012. Well, an inside day today in bar chart terms. That's a bar where we have a lower high but a higher low. So technically no change of trend in this market. The prior trend was up. Previous day's trading we had a very solid bullish breakout up above important resistance in this market, and I highlighted previously the strong resistance in a large zone. For the previous day's trading, the market took that out in a very, very bullish manner, an extreme trading day, and it's little wonder that we've seen some selling come into this market. Very often after we have these extreme type candles, we then see small body candles and the market not making a lot of net progress, and that's what we're seeing today in relationship to the previous candles around it. So certainly we're looking at this black body in relationship to the previous very large white body. But the black body that we have today in this market, this black body candle, is quite significant, where we've seen the sellers take control of this market throughout the trading day by closing down towards the low and opening up towards the high. So we've seen them, the sellers, control this market for the entire day. The sellers also made very solid net bearish progress on the day between the open and the close. Now, as we saw this zone of resistance with this grey highlighted area extended from 126.40 up to about 127.40, and it held as an area of resistance for this market. This zone may now hold as an area of support, and we do need to be aware of that with some bearishness coming into this market. We have this swing high up at the top of the zone, and that does highlight that area of support, but the support extends all the way down through to this swing low down to the 126.40 area. So we should look to the market to find support anywhere through there. The low of this zone also coincides with the area where the Tenkan is trading at the moment, so that will reinforce that 126.50, 126.40 area as a strong area of support for the market. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend to the prior time the market was trending up, and we saw the market take out the 161.8% level in a very, very bullish way, and now we're seeing some rejection from there. But this rejection combined with the test above the Fibonacci level doesn't make me confident that we will have a change of trend in this market. This just could be a minor sell-off, some profit taking in the market, and the trend may continue on its way to test up to the 261.8% level of 129.51. With the Fibonacci retracement, we're now in an expansion mode past the 100% level. The market took out the 161.8% level in a very, very bullish manner, and we do have a target up around the 128.56 level for the 261.8% target. Now, also in terms of the trend channel here, and this trend line was drawn some time ago. It's a valid trend line. It's been tested on quite a few occasions, and then the top of the trend channel has been tested here previously, and the market sold off from there. Quite often when we see a break of a trend channel to the upside, it tends to be that last rush of enthusiasm in the market, and considering where we have this very large white body candle with the buyers showing a very large amount of net bullish progress, it does suggest that there is potential for a change of trend back to the downside in the market to test lower, even perhaps down to around the trend line, which is at 124.78. And we have seen that come to fruition today to a degree with this black body candle in the market testing towards the top of this zone of previous resistance. Now, in terms of potential Japanese candlestick reversal patterns, here we have a potential harami pattern, and that's where we have a prior uptrend, which is essential with any of the candlestick reversal patterns. And we have a smallish body that's engulfed by the previous body. We have the body of the current candle within the body of the previous candle, and the body of the previous candle should basically be a white candle, and the current candle should be a small black body candle in this case. Now, we haven't had a change of trend, and a candlestick reversal pattern is a warning of a potential change of trend. And basically the reason that this is a potential reversal is because of the small amount of net progress that the opposite side has had, which is the sellers for today, and the change of momentum where previously the buyers made upside momentum and net bullish progress, and today the sellers have made net bearish progress. As I've said, we do need confirmation with this pattern, and confirmation would be a candle with a lower high and a lower low. Now, considering that we have this strong support close by, there's potential for that pattern to not to come to fruition, so we do need to be aware of that. In terms of Ichimoku, we still have a bullish market in all three time frames by trading above the cloud, above the Kijun Sen and the Tenkan Sen. And there is a possibility, as I've mentioned already, that the Tenkan Sen here down at the bottom of this strong zone of resistance will strengthen that area that will now potentially become support, and it will strengthen the bottom of that area as strong support. In terms of the Chica span here, if we look at it, it's above the corresponding price action, so it's confirming the bullishness that we're seeing in this market. And overall, a bullish market in all three time frames. We had a very large range day the previous day, an extremely bullish day. There is potential for the market to sell off and some profit taking in this market. I expect that the market, if it does continue trading down, will find support somewhere within this zone, and then the buyers will come back into the market, and we'll eventually see the market testing up to the 128.57 area of potential resistance.